72,552 smackaroonies for one Bitcoin. What a day in the markets. Crypto absolutely pumping. TradFi taking a bit of a breather, especially in tech. We'll be discussing that and much more on today's episode of Money Never Sleeps. Thank you for joining us today, everybody. Before we get going, do us a favor, hit that like button. If you haven't subscribed to our channel yet, let's fix that. Go ahead and hit that subscribe button. Also, nothing that Kevin or I say is financial advice, so please do your own research before making any buys or sells. Kev, happy Monday. We have the crypto market going crazy at the moment. Bitcoin finally burst through that 70K resistance and is on a moon mission as we speak. Tomorrow, we get the latest round of inflation data, the final big pieces of data that we'll see before the Fed's March interest rate decision. So a lot going on. I know that you have the banks on your mind. You have Asia on your mind. Where do you want to start on this beautiful Monday?
Yeah, I mean, we could talk a little bit about Asia real quick, just to get that out of the way, because apparently Japan's not in a recession now. They revised themselves out of it. The data came back and they revised themselves out of it. So it was
That's fun.
what was it, like 0.8 points or something like that difference? So that's nice and dandy. The thing is, the Bank of Japan is still gonna end yield curve control, and it's likely that they're going to do it next Monday, which would be, I think, the 18th. I think that's their next time that they're meeting. And the funny thing about that is people in the markets are kind of reacting. The Nikkei had a really bad night last night. At one point, it was down 1,145 points. I mean, I think even more at one point. Let me see. It was down at one point, about 1,182 points. So it was down almost 3%, the most since June of 2022. So that's a really big move. And again, this is at the top, but it saw how it gapped down. We saw a lot of people just absolutely selling right at the open. They bought it back right at the end. But the interesting thing is the yen is also coming down too on this, meaning that the yen is gaining strength against the dollar. Pulling this up here, you can see that the higher this goes, the worse it is for the yen. But now it's pulling back here because we're probably going to get closer to that point where we're going to get positive rates in their interest rates. Haven't seen those in a long time. I think the last time was 2007 since we had positive rates. We knew what happened right after that. But again, I think this is really a turning point in Asia because it seems like the Bank of Japan is going to be the first central bank to make a move next week. And by them making a move, that could cause other central banks to start making a move too. Again, this is a global synchronized economy. This market is completely synchronized with other global markets. There's a good chance that if something happens here, it's going to bleed into some of the other countries. Even though they say they're not in a recession, I think that is just, we're getting too technical on what a technical recession is. The US was in a technical recession in 2022, 2023 from those 2 quarters of negative GDP growth. However, we still said that we weren't in a recession, right? We're moving the goalposts every time we get a chance to talk about recessions. So I think the important thing to see is what are the central banks doing? How is this going to impact the markets? How is this going to impact sentiment? And again, Japan also, interestingly enough, their banks are also seeing a lot of problems. A lot of people have been selling off their banks recently too. So it's something to keep in mind. I think Asia is definitely where we're going to see the first move in this market, especially when it comes to central banks.
Man, we've been seeing China for a long time dealing with all that shit. Let's go into kind of the week ahead and what we're looking for. Like I said, we have CPI tomorrow. There was no data today, but we get CPI, core CPI, and the federal budget tomorrow. On Thursday, we get retail sales, we get producer price index, we get initial jobless claims. Friday, we have some manufacturing data, some import data, consumer sentiment, see what that looks like, whatever. And then next week, like I said, is when we get our next Fed rate decision. We've seen revisions left and right on employment data, on inflation data.
Yep.
So I don't know if we can really get much, like if you're really paying attention, if tomorrow's numbers are really going to be all that telling, but that doesn't mean the market isn't going to react to them because this market is not rational. It is very emotion driven, all interest rate focused. So what are you looking at tomorrow morning when those inflation numbers come out? How do you expect the market to respond?
This market's going to be stupid until probably the 14th to the 19th. That's my opinion. I think we have to get through OPEX and also some of the other things. volatility, that expiration as well. But I think that the markets are going to do everything they can potentially right now just to make everything seem better than it likely is. So if we get hot inflation data, obviously that's going to mean that we're probably going to see rates probably stay elevated for a period of time, maybe till June, maybe even later if that's the case. But at the same time, I think that the labor market is also picking up to the point where we're starting to see unemployment. I shouldn't have said labor market's picking up. The labor market's cooling down to the point where we're starting to see unemployment, right? We saw 3.9% after Joe Biden said that this is the lowest unemployment rate in 50 years. It's like the next day, unemployment goes up 0.2%. We also saw tons of jobs, in I think January revised down. It was like 300 something thousand jobs, and then it came out that it was like 157 or 185,000 jobs that were actually added. So these revisions mean nothing. The markets are going to react irrationally, like you said, either way. I think that if the number is cool, markets will probably rally, obviously, because it's like, okay, well, guess what? We're getting closer to those rate cuts, but we're not actually talking about rate cuts just yet. Or if it comes in hot, it's like, well, fuck it. Let's just keep rallying. This is the trend so far, but we do know that bad CPI data last month was the reason that we saw the biggest drop in the market in 2024 so far. So maybe that's another play that we could see.
Let's talk about what the expectations are for tomorrow. So for the headline number, expectation is 0.4% month over month and 3.1% year over year. That is actually up on the month over month and flat on year over year. So the markets are not expecting to see a whole lot of progress on this coming report. For core, it is supposed to be, the expectation is 0.3%, which would be down month over month, and 3.7% year over year, which would be down slightly. If we see it come in hot, expect the markets to act accordingly. I think lately, the expectations have been right in line with what's actually come out. So I'm not expecting anything too crazy tomorrow. Now, famous last words. I've said that in the past, and me personally, I'm not trading any of this stuff. Like
Yeah.
I have my game plan. It is the year of do less. I've made my Nvidia sales so far this year, and honestly, besides sitting on cash and buying if we see a dip, I'm not doing a whole lot of trading these days. So good luck to anyone out there who's trying to trade on these short time frames, especially around these reports, because I mean, it takes a smarter person than I to figure out how to do that. So Godspeed.
Yeah, it doesn't seem right to be trading a lot towards here too, right? I mean, here's the thing. You're in a really good fucking move in 2023 into 2024. So if you want to go long, obviously there's risk involved with that, but also going short, there's risk involved with that too. It's a very hard place to trade right now. The markets are irrational. Bad news isn't necessarily bad news. We've seen news that was bad one time be good the next time, and the markets rally both times. It doesn't make sense. So I think that tomorrow is just going to be, like you said, it's probably going to be in line. We're not going to see anything move too much. I don't think we're going to see really anything pick up until maybe the half end of March into April. I think we have to get some of that Q1 data in too from earnings, which is unfortunate because that's another month or so away. But after this, I mean, we're all data driven right now. All the earnings from Q4 are gone. We're waiting for Q1, and we're just seeing a lot of things that are kind of adding up that make conditions kind of right for, I'm not saying a pullback, but definitely conditions right for maybe a bit of a sell off, right? I don't think a lot of people know this, but I think the 14th, the buyback window begins, the blackout window. So a lot of these companies can't buy back their stock, which tech companies have been doing that for the longest time now, 6 months straight. So it's going to be really interesting to see how the markets react. I think a lot of it comes down to how some of these institutions react to that data, if they want to run it up more or if they want to, take some off the top.
Okay. We're seeing, I'm watching these charts as we speak, and Bitcoin is just going absolutely crazy. We're approaching 73K. I did not expect us to be at this point right now. What else? Let's talk about, I know that you've been like hammering the bank term funding program.
Yep.
I would like to kind of give you the floor here. Now that we're coming to the end of it, what are your thoughts? And, we've talked about why in the past it matters and why this is important, but I want to kind of get down to in the near term, because we've always talked big picture, but I'm curious if you have any like near term expectations or predictions that you want to share.
Definitely, yeah. So bank term funding program, I think there's a lot of misconceptions around it, especially over the weekend. I was just reading stuff on Twitter. I'm like, shut the fuck up, everyone. That's literally not what's going on here. I think a lot of people are thinking of it as just an extraction of liquidity, which it is. But the problem with it is you need collateral to put up for the Fed to issue that money out to you at a lower rate than some of these other markets, right? So we could go to the secondary market, which I'm going to pull up right now, and we could see that on Friday someone was already pulling money out of it. The reason why they would go there as opposed to the bank term funding program is probably because they didn't have the collateral. So obviously this is in the past. This is the secondary credit, assets and liquidity credit facilities. We've seen it in the past rally, a lot out of nowhere. Those spikes are usually things that are broken in the system. I want to just pull up what happened on Friday. It's kind of hard to see. There we go. Or I guess it's Wednesday. So last week, no, this would have been Friday in between the 28th and the 6th of March. So what that is tells me 125 million or so that was pulled is that someone probably didn't have that collateral that the Fed required to use the bank term funding program, and they have to go to the secondary market where the interest rates are a lot higher. So that tells me a bit of desperation. Now, this is very early in the game. I think we have to wait for a couple more weeks to see if this is really becoming a problem. But what we're seeing now is there's going to be less liquidity that the Fed can issue because there is a collateral shortage in the system. We're going to also probably see the reverse repo begin to drain. It shot up today a little bit. We're looking at $488 billion, but every time that we do climb up from that, we do see a pretty significant pump to the downside. I should have said dump to the downside. Let me pull up what we're looking at for the reverse repo. The interesting thing about the reverse repo is the less people that are parking money in the facility tells you that there's less liquidity in the system that they can park in there. But let's pull this up right now. And we're seeing some counterparties have less liquidity to park in a reverse repo and make that easy money. But I mean, we're very close to the point of we're below $500 billion. And every time that we go on the shorter time frames, we can see that any short-term rally that we have met with downside, right? We're kind of rallying here. I don't like to use technicals on this. We'll see how this plays out over the next few days, but I do think that within the next few weeks or so, we're probably going to see it back down below $400 billion, maybe closer to that $250 billion. And I do think that this is going to run out a lot faster now that bank term funding program is out of the way. It was an arbitrage. People were using that because you could take that money, park it in the reverse repo, make some money that way. You can also put it into the equity market, and then NVIDIA is giving 15% almost every other day there for 3-4 months from January to today. There's a lot of ways to make money, but now we're getting close to the top. Liquidity seems to be a bit of an issue, and I think collateral is even more of an issue right now. We're going to probably see a lot of these facilities either drain, or we're going to start seeing a lot less money circulate into some of the major, the major equity indexes and stuff like that. These banks are probably going to have to keep their reserves up higher now. I think the Fed's probably going to make some type of statement where they're going to ask for you to keep more cash on hand. We know that the FDIC is also kind of tapped out too. They're concerned. They were asking a lot of people to use the bank term funding program 2 months ago because they're concerned of stress to the banking system. It's a lot of things that are probably going to go on. This is just one thing that rips the Band-Aid off of, okay, well, that's one thing that was kind of holding this this pile of shit together. Now it's a little bit less formed. It's a little bit looser, and the more things that are kind of
let's cut back on the shit analogies, okay?
Well, all right, fine. Say it's a crack in the dam. So you took off one of the band-aids from that, and now a little bit more water's coming out, right? And
the Vegas vacation comparison when Clark is putting the pieces of gum in the dam, and all of a sudden the water squirts out. That's where we're at right now.
That's pretty much where we are at. So obviously, bank term funding programs. Let's say 3 bank term funding programs gone. All right, now we have the reverse repo we have to wait for. And I'm not flipping you off. That was just kind of funny that this happened to be my middle finger. But then you're fucked. Then you're fucked, essentially. So
appreciate it, Kev.
That's it. Yeah.
All right. Let's look at good day, Scotch and Stocks. How are we doing, sir? Let's look at some of the do you want to do a quick run through TradFi, or do you want to just jump into crypto? Because we're seeing kind of a mixed reaction in the market today on the TradFi side. Nvidia continuing to have a bit of a pullback here after Friday's. I mean, we didn't get to talk about the price action of Nvidia on Friday, but that was from the top of the market when Nvidia got to about 973. It saw a 10% drawdown to where it closed on the day. So pretty wild for an asset of that size. Do you want to talk about any of these, or do you want to get into crypto?
Let's talk a little bit about Nvidia and some of the other ones. Nothing too crazy or high level. I just wanted to bring it up. Yep, Scotch and Stocks. I'm also happy he's here today too, because he was the guy that was bringing up ARM, and the ARM unlock happens tomorrow. I believe it's March 12th. So what a lot of people are saying is that Nvidia, erasing that $200 billion of market cap is actually ARM selling, or not ARM, what do you call it? SoftBank selling off a ton of shares. We also know that SoftBank on Friday dropped significantly, both in the Asian markets and I believe the OTC market here in the United States. But it's really interesting right now looking at Nvidia. And again, I'm bringing up something that I would never ever say, but I kind of agree with Kathy Wood talking about how semiconductors need a pullback, and she's not wrong in my opinion, just because of how overextended this is. Again, I'm not going to short it, but we are starting to see a really good pullback. One of the best pullbacks that we've seen from Nvidia, right? Let's go to the top to where we were on, I guess, earlier today. It's a 13% move to the downside. Again, it's not where it closed or opened. It's just, where it traded at a given point. Let's see this pullback here. Let's go from here to there. That's only 10% back in February of this year. But for the most part, we haven't seen a pullback like that. So it's really interesting to see that. I think that's people taking some off the top. But that's a really interesting thing to see with Nvidia. It's pulling back. Obviously, I think that there's a chance that we could see more pullback as the stock buyback window also closes. And again, it goes in line with the banks. They were getting all that money that they could actually throw into the equity markets, and that leverage just absolutely brings that mania top even worse. We also know that a lot of people are probably not shorting Nvidia as much as they once were. A lot of those positions were either liquidated or they had to close those positions to cover. I think that's also why we saw a bit of covering buyback in the market today, right before the close. But let's look at super microcomputer as well, because that's very similar to Nvidia. That's down 5.13% once again. And I said this was a very dangerous range up here. It's one that you're going to have to watch. Again, here's the bank term funding program ending today. You can see that we're right back in that range. It closed right in it after closing above it on Friday. So it's going to be interesting to see that. And again, bearish divergence, if we look at the volumes on the daily to how the price has been moving up. This is going to be something we're going to look at on Bitcoin as well. I'm not saying that the market's going to crash or this is going to crash down. You want to see where the levels of support and resistance are for a lot of these stocks and some of these assets. You're not necessarily seeing a lot of it until maybe right around here, maybe 712. I mean, you could come down here and test the thousands. And there's a little bit of trading here, but for like something like Nvidia, Nvidia has a good chance of seeing some significant downside at some point. I don't know when, but maybe 825 is a good move. I think even this like 740 to maybe 700 where that 50 moving average is, that's probably a good level of support that we could see. I'm not saying it's going to happen tomorrow, but I think it's something that we could see now that the conditions are kind of right, that no one's buying into this market. We're having problems with liquidity and collateral in the system entirely. But we're looking at some of the other top stocks. Microsoft looks very toppy to me. I'm not saying that in a bad way, but it finally caught up with the 50 moving average, right? It's trading sideways above it. I'm not saying it's going to go down, but we can see that this has been a 5-wave move to the upside. What's happening here? I think we're probably days to weeks away from finding out whether it's going to be another push up or another push down. But if we start to lose this 50 moving average, just keep that in mind. There's a good chance that we are probably going to come down and test the 200, or the 200 is going to come up and try and test at somewhere in the middle, meet somewhere in the middle. That could be somewhere in the 370 range. We just have to keep an eye on that. But it's a good pullback. We're starting to see these kind of see less growth up and more pull down to obviously people taking profit. Amazon having a pretty bad day today. I mean, it was worse earlier, but it looks like it's down 1.7% or so. Again, 50 moving average, something we're going to have to watch and see. And then Meta, actually the worst day it's had in a long time. It's down. It was at one point down a lot more. It was down 5%. You can see that they bought it back. But it looks like it's breaking out from this parallel channel. It wants to come down and test that 50 moving average. Again, we got a massive gap down here. So there is a good chance that we could just absolutely close below the 50 and maybe find some support here, and then maybe the 200 and the stock price meet somewhere in the middle. But across the board, those are the top 4 that weren't showing any signs of weakness, and now they are. So it's something interesting to see. It's not super bad, but I think once people stop buying the stock and it's corporations that are buying their own stock back, then you might have a bit of a problem, right? So that's all I got on the equity front. I think that's pretty much good.
It's been the magnificent 7 holding it up over the last year, and
Yeah.
if we see them start to go, people take profits and run in for the hills, then I don't, it's one of those situations where we can compare it to that turn to the Magnificent 5, Magnificent 4, maybe,
4
3.
horsemen of the apocalypse now.
Yeah,
I think that's what it is.
But it could be a similar situation where, we see crypto with Bitcoin, when that starts to pull back, the alts start to pull back. It could be a similar setup here in TradFi. The crypto astronaut himself, Value in Time, showing up. Good to see you, buddy.
Thanks for being here, man.
Let's get into crypto. We can start with Bitcoin, which is continuing to push all-time highs. We saw it wick up to 72, 889, kind of what I'm seeing here. It's still right below that. Finally, I think it was its third attempt to get through 70K, and it finally did it. And it's sitting well above that at this point. We've seen positive rhetoric from it on CNBC from Larry Fink. We've seen Trump talk about it in a good way. Like everyone in
they had him on.
Yeah. You're hearing a lot of positive discussion around Bitcoin, and you have to wonder, does this keep, do we see the people who are, invested in BlackRock, who have their money there, want to move into Bitcoin? Is this money that has been sidelined, some of this old money that has not wanted to believe in Bitcoin in the past because we had people like Warren Buffett and, Charlie Munger, RIP, saying all these negative things about it? Like, are we seeing a change of the narrative, and does that continue to drive the price up is what I'm wondering moving forward? Because I mean, it's not slowing down. Like, it's been really crazy, and eventually it might run into a wall. But is that wall going to be at 100K, or is that wall going to be at 75K? And that makes a big difference.
It's really hard right here too, because you make a great point. A lot of people do want to get in, want exposure. Obviously, as the price shoots up even more, they want that exposure, right? It's FOMO. A lot of people who weren't buying it down at,
Let me say, I want to say one thing about that.
Yeah, sure.
Institutions and smart investors are not immune to FOMO. Okay. Like, let's just make that very, very clear. The smartest minds in the world, the people with big bank accounts, they are not immune to the FOMO of the crypto markets, especially if they've been sitting, in a lot of cash over the last 15, 18 months. So that is one of the arguments to the upside here.
Yeah. Look at Vanguard, right? They ousted their CEO, and then pretty much like
that was people making that out. That's not the reason why.
I know, but it's funny.
People like, that guy was at Vanguard for like 30 years. He was retiring. He made it like, he did an amazing job. Like, people like, oh, he didn't do the spot ETF, and that's why he got fired. It's like, no, idiots. Like, you'll believe anything you hear.
But it shows you how quickly a narrative can turn, right? So obviously, people are going to want to outperform other, hedge funds and other programs like that, so that they can keep their people happy. And obviously, if you don't have exposure to Bitcoin now, it's almost like not having exposure to Nvidia back in May of last year, right? So it's really interesting here looking at this. And again, I have a very cynical view of this. And again, I'm cynical because I know there's a huge portion of this rally to the upside that isn't backed 100% by cash. And I will say that that's Tether, right? They printed $2 billion over the weekend. We're waiting to see where that gets injected. We're also seeing that 17% of the Bitcoin total, volume over the past day or so is coming from Binance BTC against FDUSD, a stable coin that has roughly, let's see what FDUSD's market cap is. Their market cap is $3 billion, and you're getting 17% of all Bitcoin transaction volume in that. And Binance owns like $3 billion worth of that, of the total market cap. So it's very manipulated. Sometimes it's hard to fight that. That's why I think it's not a good idea to necessarily short. That's why I haven't opened any shorts, or I don't really want to mess with any of that stuff. But there's two things that could happen here with Bitcoin shooting up this high, and I want to think big picture here. One, everything is different from how the prior halving years have been, and we're rallying higher. And we were waiting for that 40% pullback. Could that still happen? Absolutely. But the thing is, are we putting in, there's two scenarios. We're either putting in a regular ABC corrective pattern, which is right here. We go higher for the wave B, which means that we would go not as deep as we did as the wave A for the wave C. So it looks something like this, maybe around 30K or so. And again, I'm just eyeballing it. That could be the correction that we get, right? It depends on how high we go up with this. This could go up a lot higher. I'm not going to fight Bitcoin up here. It's stupid too, I think. But I also want to keep in mind that this is very different than anything that Bitcoin's ever seen in its history, right? We could say that the COVID crash, which is somewhere right around here, that was a big move. I mean, compared to where we are now, it's a very different move, right? I think that this right here could be very similar to 2000, the .com bubble, just how fast everything kind of goes up as fast as it can. And I also think that we're also on the tail end of the end of kind of QE, or this period of QE where all this money that was available in the system now is starting to get called back into debt. And we could see a lot of people who are starting to lose their jobs kind of sell off because, hey, they made some money. They don't want to see an asset go down with, maybe bad timing of unemployment, all these bills that are coming due. We could see that. And, this could have gone higher, but this could also go even lower than where it did in FTX. It's really hard to do TA in these mania phases. And while Bitcoin has had some of these mania phases, nothing compares to where we are in terms of the macro into the global economy and global markets right now. So that's something I'm curious to see how that plays out. Now, if we want to look at this in some other ways, obviously I'm going to be, a bit honest here. Look at how much that the monthly has been up. And again, this is all green, right? This is amazing. If you bought down here, it's an amazing move to the upside. But it's very interesting to me that given where we were down here and where we are now, the volumes have actually decreased on the monthly while the price has been pushing up. I mean, that's huge bearish divergence. That's a massive amount too, right? I'm very concerned about that on the monthly. The monthly is also, if you look at the stochastic RSI, is at 100 and 100, completely overbought. Now, if we look at the Bollinger Bands, which is kind of tells you if things are getting a bit frothy or not, you can see that they expanded back here in November, which obviously makes sense. But now the monthly is above the Bollinger Bands. That's kind of concerning there. And again, I could go on every single time frame and look at this above the Bollinger Bands on the weekly. At the same time, volume coming down while the price going up. If we look at this on the daily as well, we're touching right around the top of that Bollinger Band, and the volumes are pretty much low or coming down from where we saw the bottom of FTX to the point where we are currently. The volumes are very different than where they were then. You were actually getting a lot more volume down here than you are up here. So there's a lot of things where we look at the technicals where it kind of sketchy. I wouldn't necessarily want to be playing this market right now, but it's something that we have to keep in mind, right? I'm not saying it's going to turn back tomorrow. Halving is what, next month, I believe, sometime in April, April 20th.
Less than 50 days away, less than 45 days away, something like that.
Exactly. And the interesting thing too is we should probably talk about this before we move on. Look at some of these mining companies for Bitcoin. Down 9% from Mara. Riot, let's take a look at that. Riot's down 3.48%. It's completely inverse of what's happening right now with Bitcoin. So I think that's really interesting too, right? I mean, let's fucking look at what Michael Saylor's doing too, because
I'm wondering, I would be interested in looking at Riot and Mara and how they reacted at similar halvings. Like, is this just a reaction to the fact that they're not going to be, in the next, people are kind of front running the halving, knowing that like, hey, in 45 days, they're not going to be pulling in as much. They're not going to be as profitable. Like, have we seen that in the past on the daily, whatever time frame you want to look at for those mining stocks leading up to a halving?
Yeah. Let's do that tomorrow. I'll take a look into it and see like historically how they've performed. I think that's a really good thing to bring up because they've been down for a few days now, and maybe people are front running and they're just kind of dumping some of those stocks. But, it seems odd to me that those aren't going up with Bitcoin, but, you see something like Coinbase is doing extremely well. So there's definitely some type of correlation there that's not necessarily adding up. Mara currently has 60% short float. Interesting. And their last earnings were not great. Okay. Interesting. They're also raising capital. Hopefully it's not USDT. But fuck, I can go to Paulo and probably get a couple $1 billion right now. As long as I put it back in Bitcoin or one of the other shit coins, right? Pepe Cum or Geo Biden. What are some of these other ones?
J.O. Bowden.
I can't even pronounce it. I was like, Bowden.
There's just this whole collection of shit coins on Sol, which are just different politicians' names spelled wrong with funny pictures of them. Like Elizabeth Warren even tweeted about hers and how she has no involvement in this and how it's a security. I'm like, what are you talking about? Like, please. And she did the worst thing possible. She addressed it. She brought it up, and now more people are going to buy it. So, like, if you're holding a big bag of whatever her shitcoin was on Sol, congratulations. I'm sure it spiked after her tweet where she was bitching about it.
It's like mongoose coin, man. It's you can't fight with the mongoose.
Fight the dog. I can't.
You know what? And again,
all of this is going on while we still have a geriatric, collection of people leading this country. Just wait until we have some more progressive, forward-thinking people in there. May not happen for a while, but watch out, buddy.
Yeah, man. Let's just take a look at some of the funding rates right now because things are going absolutely crazy, right? These are the current rates. These are not, the 1 day, the 7 day, the 30 day, or the year. You can see that for the yearly right now, we're about 5 times more than we normally should be. 30. Ooh, what the hell is that? There we go. Oh, what the hell? There we go. Stupid numbers. But yeah, we're about almost 5 times higher right now for Bitcoin. Early this morning before the pump, it was like 9% or something like that we're looking at. So obviously people are definitely going max long, but the interesting thing is we're expecting the futures price to be higher than the spot price. And by that means that a lot of people have to pay the funding rates, the difference of that, to short positions. So, I mean, you could have a short position right now and just be making a shit ton of money by holding that position. It doesn't necessarily need to be, profitable. I mean, if you were able to survive and make all that money from funding rates, you might be able to close your short pretty nice. But people who are longing here with max leverage or just leverage in general, and it's huge amounts, you have a ton of lots of BTC or some of these other ones that are extremely high, you're paying out the ass to keep those positions open. And that is, and it's been like that for 2-3 weeks now. So I hope you have the capital and I hope you make enough where it makes that trade worth it, because that is not fun. I remember sitting in a Binance and the Tron short last year where it was just not fun. It was pointless to keep open. But just looking here, we can see that XRP is actually doing really, it's pretty hot right now on the funding rates. It's at about 8%. Cardano about 8%. Looks like the alts are actually doing pretty hot numbers right now. I mean, AVAX about 8%. Pepe, fuck Pepe, 10%. Binance, obviously, people are neutral on that. To wrap up, though, I do want to show one last thing. This is Binance. This is a coin or a company that their CEO arrested, probably going to go to jail if he is convicted. I don't know. We'll find out in April. But this is a coin that is pretty much shot up since
Good coin,
then.
good technology.
Good tech, right? Yeah, fuck me.
Good tech.
Look at that, 156% since CZ went bye-bye. Guys, where's this money coming from? We're talking about $40 billion of market cap added to Binance BNB. So USDT is a hell of a drug. I'm just saying it like that. But yeah, this is crazy. I'm not going to fight this meme stock or meme coin mania or Bitcoin up here. I'm just going to point out that the macro doesn't look too hot, it's a bit too spicy for me to be saying that we could push up. We could, but trying to be the voice of reason around here.
My president shills my bags. I don't know about yours. Okay. Value in time. It's only going to get better. It's only going to get better from here. What about Dogecoin? Also very good technology. It's
see if we get the dancing dog again.
The time to buy Dogecoin is you had all the time in the world to buy Dogecoin. If you didn't do it already, I don't know if I'd be doing it now, but I'm also not a meme coiner. So, I'm a boomer at heart. So I don't really know. Don't come to me for advice.
How dare Doge rally right before
only
FTX
is really the best tech. That's the only technology people want. They don't actually want anything like useful. They just want number go up, and Dogecoin has very good technology when it comes to that. So shout out to them.
God bless them.
God bless them. All right. That is going to wrap it up for today. Appreciate everybody for joining us. If you haven't yet, Ace, thank you for shouting it out. Hit that like button, subscribe to the channel, drop a comment, share us out on social, all that good stuff. We'll be back tomorrow looking through some of the BTC mining stocks. Kevin's going to do a little bit of research today. He's going to do some sleuthing there.
Look at
talk about the CPI numbers for tomorrow. Excited to see what plays out in that regard. So thanks, everybody. Have an awesome day. Stay safe in the markets, and we will see you next time.
Take care, everyone.